While small caps are still trailing broader markets year to date, some folks on the street see potential for upside in the group, including our next guest. We've got Greg Tuorto. He is Goldman Sachs Asset Management Equity Portfolio Manager with us. Greg, thanks for being here, and so excited to discuss the brave call here of going to small caps instead of just talking about tech all the time. I mean, of course, my big question, right? Why now for small caps when we're seeing that 5 companies are driving 27% of gains in the S&P 500? Why is now the time to get into small caps?
Yeah, it's interesting. As I was thinking about preparing for the shot, I was thinking about how the bond market is. The legendary strategist James Carville used to say the bond market is out there intimidating everybody. I'm paraphrasing, obviously, and it definitely has had that impact on small caps in the last couple of years, and it's been a very, very hard place to try to make money in the face of what's happening with the very big, the big caps and the mega caps out there doing what they're doing. I do think that there's a large catch-up trade that's in place that we will see as rate certainty starts to come into the picture, and I do think that we've seen previews of that, over the course of last year and this year. And if you look at some of the way the companies in the small cap space have been performing, some of our names who have reported good earnings that really kind of have great theme tailwinds that are out there have done quite well, even in the face of what's going on with the mega caps.
Well, that's really interesting. You mentioned the treasury space, and of course the concern with small caps that you kind of talked about just there is that higher for longer is really going to impact small cap names more than large caps that are able to refinance their debt. Small caps don't necessarily have that capability. If the Fed does not cut in a timeline that is suitable for small caps, how much does that change your thesis?
It doesn't change it all that much, because I do think that what the small caps have had to do over the last 2 years is really get used to that higher for longer type environment. And I think that most of the companies we own that we really like a lot don't have that balance sheet risk with heavily indebted or floating rate exposure that people also often think of as a big risk for small caps. So I do think you have to be selective. It kind of forces people to think about going active in small caps, not really staying in any of the passive indices, and really kind of looking for things and for companies that are tied to some of those trends that we think can grow through a higher for longer type environment.
How important is stock picking when it comes to small caps? Because a lot of folks who we talk to, and even a lot of investors and retail investors, own small caps through ETFs, for example. They're not necessarily picking stocks. Which of those two is a more attractive strategy in your view?
We think that stock selection is the most important piece of the small cap, environment, because the indexes themselves are a bit flawed. There's a lot of things in there that I think most investors don't really want to be invested in, and areas that have a lot of banks, for example, in some areas, maybe some very unprofitable companies that don't have the prospect of turning profitable anytime soon. So having that ability to kind of lean into the companies you like, really get to know the companies like we do in terms of spending time with management teams, I think that really can put the kind of the give you a little bit more of a leg up when it comes to picking stocks, and it kind of gets you out of some of the areas that can trip you up.
Well, you sent over a couple of stock picks, and we only have time to talk about one, but you've got on the list Boot Barn, Transmedics, DigitalOcean. I want to talk to you about Boot Barn, though. I just took a look. This stock is up over 70% year to date, which is crazy. How is that, and why do they have more room to run, in your view?
I think it's a company that's got a very, very efficient way to grow. There'll be a nice, kind of leg up, and no pun intended, in store growth this year. But I think that there is an area where Western wear is becoming thematically fun again. Workwear is an area also that they do quite well in. And we also just saw an update from them very recently, I think it was yesterday, where their comps, their same-store sales are actually running much better than expected. So some of the negatives that people are worried about with the consumer spending are not resonant at Boot Barn.
All right, Greg, we got to leave it there, but really appreciate the conversation. Thanks for joining us and sticking your neck out for small caps here. That was Greg Tuorto. He is Goldman Sachs Asset Management Portfolio Manager.